This is Barry Zalma speaking on Zalma on Insurance on YouTube. I am an attorney who has retired from the practice of law and now spend my time as an insurance claims consultant, insurance claims expert witness, author, and producer of these videos. Continuing with our series on the 15 Claims Commandments, we start with Claims Commandment number 7. Thou shalt never lie to an insured. Insurance, since its inception, has been considered a business of the utmost good faith. The principle of utmost good faith, uberrimae fides in Latin, was, I believe, first stated in the British House of Lords by Lord Mansfield in 1766, in a case where he concluded that the duty of good faith rests upon both the insured and the insurer, and held the insurer to its knowledge at the time the policy was signed. The insurer, like the insureds, took the premium, knowing the condition of the security provided, and could not upon loss claim that the insurer was deceived. The case is known as Carter versus Boehm, B-O-E-H-M, which is recorded as a 1766 decision of the British House of Lords at 3 Burr, 1905. As the old maxim says, honesty is the best policy. This is especially important when dealing with insurance claims. There is no excuse for an insurance claims professional to lie to an insured. Not only is a lie to an insured a failure to act with the utmost good faith, it is an action fraught with danger for the adjuster and the company for which he works. Keeping up a consistent lie is almost impossible. All definite statements can be corroborated or proven false by further investigation. If a lie is made, the lie will eventually be proved. Lies to insureds, even when done for what the claims person believes is a good purpose, will always cause the insurer problems. Lies created on the run invariably include internal contradictions. A lie told to an insured can be and most certainly will be used by the insured to prove that the actions of the insurer were made in bad faith, such that the insurer must be punished with tort and punitive damages. Consider Allison versus the Fire Insurance Exchange, a 2002 decision of the Texas Court of Appeal, where a major punitive damage award was obtained by a plaintiff who claimed that the adjuster lied to her about the authority to resolve the claim for mold damage. Although the case was reversed because of an excess verdict, the lie cost the insurer a great deal of money when the case was eventually settled, and resulted in hundreds, if not thousands, of mold damage claims against other insurers as well as against the Fire Insurance Exchange. Claims people get into trouble when they fail to tell the truth. In the Allison case, the adjuster admitted on the stand that she lied to Ms. Allison when she reported that she needed an additional 30 days to conclude a claim, when in fact she didn't need any time at all and the money was on its way. She had just used a form letter that included that information, which at the time it was issued was false. So claims people get into trouble when they say things like, the check is in the mail. There is no problem with coverage, when in fact there is. I will pay the fees of the lawyer of your choice, when the adjuster doesn't have that kind of authority. The claim is being reviewed by senior management, when that is simply not true. I need another 30 days to complete my investigations, when in fact the investigations were complete. I need a copy of your policy, when the adjuster has it and could have obtained it from the insured. I need you to go to all of the places where you bought the stolen property to get a receipt. I will hire a contractor to rebuild your house. I don't have authority to settle your claim. I don't need to do an investigation to know your claim is not covered, or any other statement that is not true. California Insurance Code Section 790.03H1 provides, in language that is identical to that in almost every state, that knowingly committing or performing with such frequency as to indicate a general business practice, any of the following unfair claims settlement practices is a violation, and that unfair claims practice that the statute points out as its first evil is, quote, misrepresenting to claimants, and claimants by the statute include insureds, pertinent facts or insurance policy provisions relating to any coverages at issue. Similarly, the California Code of Regulations at 10 CFR 2695.4 provides, no insurer shall misrepresent or conceal benefits, coverages, time limits, or other provisions of the bond which may apply to the claim presented under a surety bond, and there's similar statements with regard to insurance policies. This, to any professional adjuster, should be self-evident. It is a statement of prudent and common claims handling. Although the regulations seem to apply only to surety bonds, it also applies to any type of insurance. Nothing can be gained by an insurer concealing or misrepresenting information about the policy or a surety bond to its insureds. Claims staff should be warned that violation of this regulation will be grounds for discipline and almost certain loss of employment. And even if there is no regulation, lying to an insured about the coverages available or the claim handling is to be grounds for discipline and certain loss of employment. On the other hand, proving that insurers and insureds play on a different set of rules, a mere oversight or honest mistake, will not cost an insured his or her coverage. The lie from an insured to the insurer must be willful and intentional. Consider the U.S. Supreme Court decision Claflin versus Commonwealth Insurance Company, an 1884 decision that is still the law of the United States. Claims Commandment 8. Thou shalt not suffer fraud to succeed. Insurance fraud in the U.S. is epidemic. Insurance fraud continually takes more money each year than it did the last from the insurance buying public. No one really knows how much is taken in fraud, since fraud mostly succeeds. But the best estimates of the extent of insurance fraud in the United States range from $87 billion to $300 billion every year. The estimates are based on a percentage of the amount paid out in claims, and is essentially an educated guess. In truth, no one really knows the extent of insurance fraud. Insurers and government-backed pseudo-insurers like Medicare, Medicaid, and the National Flood Insurance Program can only estimate the extent they lose to fraudulent claims. No one will ever place an exact number on the amount lost to insurance fraud, but everyone who has looked at the issue knows, whether based on their heart, their gut, or the empirical fact of convictions for the crime of insurance fraud, that the number is enormous. When insurers and governments put out a serious effort to reduce the amount of insurance fraud, the number of claims presented to insurers and the pseudo-insurers drop logarithmically. For example, a report from the Insurance Services Office noted that insurers consider fraud a serious problem, but their company's anti-fraud efforts only are moderately effective. 68% said their company's anti-fraud programs address claims fraud thoroughly. 19% said they address premium fraud thoroughly. 25% said they address application fraud thoroughly. That's not a very big percentage. Slightly more than one-third, 37%, thought the amount of fraud their companies have experienced has increased over the past 3 years. 42% thought that 21% of or more of total claims contain soft fraud, that is not intentional fraud, just fraud that happened to come about as a result of the claims presentation. But only 6% think that the 21% or more of claims contain hard fraud. They agree that fraud is most prevalent in the private passenger, auto, and workers' compensation lines of business. 82% of the 353 insurers responding to the survey said they have an anti-fraud program at their companies. 100% of the large insurers and 91% of the medium insurers and 64% of the small insurers have an anti-fraud program. This should be greater by now, since almost every state requires by statute that insurers maintain an anti-fraud program. 63% of the companies said that the state or states in which their companies do business require an anti-fraud program, and that percentage has grown enormously over the years. Only 13% of insurers doing business in these states consider state requirements and guidelines to be very useful to them or to assist in their anti-fraud program. Because fewer than one-third of respondents to the ISO survey answered questions about their company's expenditures, estimates of industry-wide spending on anti-fraud efforts are simply not reliable. The response rate suggests that insurers are unable to isolate anti-fraud expenditures in their budgets, or are unwilling to share what figures they have with other insurers and the general public. Insurance fraud prosecutions and investigations are honestly anemic. What the reports do not tell is that most of those convicted were sentenced to probation. Few made full restitution, and those who served time were few and far between. Insurance criminals are laughing at the insurance industry, the police agencies, the fraud divisions, and the insurance prosecutors. If they are one of the few criminally convicted, they face an average sentence of no more than 5 years, usually probation, and at most 60 days in jail. Jail time is usually served on weekends so that the convicted fraud perpetrators can still ply their fraudulent trade on weekends. It is only when the insurance fraud perpetrator defrauds a pseudo-insurer owned by the U.S. government, where U.S. government funds are involved, that the prosecution will go to a federal court, and the federal court will usually assess jail time for the perpetrator, and federal jail time is served totally, not just a small portion. For insurance fraud to be prosecuted where it is perpetrated against a commercial insurer, the insurer is obligated to do the work to complete a thorough investigation that can be presented to a prosecutor, because police, federal investigators, prosecutors, and even fraud division investigators will do nothing until the case is presented to them in detail by an insurer. Every person involved in the business of insurance must understand that insurance fraud is the orphan child of the criminal justice system. Insurance fraud will never be totally defeated. It will be reduced and may be made unprofitable to the perpetrators when the public and prosecutors recognize that insurance fraud is a serious problem that affects their own financial condition. Everyone involved in the business of insurance and everyone who buys insurance must make it clear that they are angry with what is happening to their insurance premium dollar. When I and everyone who has ever purchased a policy of insurance hear that $300 out of every $1,000 paid in premium goes to a criminal, we shall all want to scream out the window, as did the character in Network. I'm mad as hell and I'm not going to take this anymore. So what is fraud? Insurance fraud is a tort, a civil wrong. Black's Law Dictionary defines fraud as follows, quote, an intentional perversion of the truth for the purpose of inducing another in reliance upon it to part with some valuable thing belonging to him or to surrender a legal right, a false representation of a matter of fact, whether by words or by conduct, by false or misleading allegations, or by concealment of that which should have been disclosed, which deceives and is intended to deceive another so that he shall act upon it to his legal injury. Close quote. In simple language, fraud is a lie told for the purpose of obtaining money from another who believes the lie to be true. Civil insurance fraud exists if an insured makes a representation to the insurer that the insured knows is false, conceals from the insurer a fact he or she knows is material to the insurer, makes a promise he or she does not intend to keep, and makes a misrepresentation on which the insurer relies in issuing the policy that results in the insurer incurring damage. The beginning of a thorough insurance fraud investigation is the interview. The interview can be informal, it can be recorded with an audio recording device, it can be recorded with a handwritten statement signed by the witness, or it can be recorded by a certified shorthand reporter. The interview is a structured conversation, it is not an interrogation. It is not the stuff of spy films, police investigations, or prisoner of war camps. Interviews are everywhere. Interviewing is an art every adjuster or claims person must master if he or she is to perform the job of the adjuster, especially when faced with a potential fraud. use of methods similar to those used by scientists conducting experiments is a more accurate description of an insurance claim interview. Whenever fraud is suspected, it is the duty of the insurer, its claim staff, and its special investigation unit to conduct a thorough investigation. If a preponderance of the evidence gathered reveals that a fraud has been attempted or committed, that there was a material misrepresentation or a concealment of a material fact made with the intent to deceive the insurer, and that the insurer was actually deceived to the point where the insurer was damaged by the deception, the claim must be rejected as a fraud, and if there is a preponderance of the evidence, it must be the insistence of the insurer that the case brought by an insured whose claim is rejected for fraud be taken all the way to trial, that no settlement be accepted or even offered, and that if the insurer loses at trial, that it will appeal to the highest court in the state. If a preponderance of the evidence does not exist, or establishes there was no fraud, then the insurer must pay the claim in an amount that satisfies the insured. If you wish to know everything there is to know about insurance fraud, I have rewritten my seminal book on insurance fraud, which is available now at Amazon.com or through www.zalma.com with a link to the insurance claims library. I have also published, or had published by the ABA, the Insurance Fraud Desk Book, which is available from the American Bar Association. If you are interested, please go to my website and you will find more about the claims commandments in my seminal book, Zalma on Insurance Claim, which consists of 10 volumes. Thank you for your attention.